Hey guys, Luca here, thanks for jumping into our video. Today we're diving into Trump's latest announcement on tariffs, how it impacted the markets as we've seen stocks dumping on Monday, and how it will continue to impact them moving forward. So if you're enjoying the content, don't forget to give this video a thumbs up, and make sure to subscribe to the channel so you never miss out on future updates like this. Now let's get into it. So on Monday, Trump has announced that new tariffs he is expected to announce this week would hit all countries. And so was quite an unexpected news, as so far, he was only targeting countries that have the largest trade imbalances with the United States. And given this, it could have some serious impacts on the prices moving forward, as it will no longer impact some certain products that are imported from countries that have the trade imbalances with the United States, but from all countries. And so this would impact the economy as a whole, which was something that the markets got afraid of. And so we've seen the VIX pumping, we've seen the markets also crashing on Monday, and that was when the fear came back once again in the markets. Now, a few days ago when we had a FOMC meeting, Powell has made a statement that has really caught my attention, that tariffs tend to bring inflation up, which is normal, okay, because tariffs equal higher prices as corporations pass costs to consumers. But if consumers were really struggling and were tapped out, then they wouldn't be able to afford that product anymore, and so the demand would simply drop. So Powell's comment may hint towards the fact that consumer spending power still remains strong, even with the recession fears we've seen the past weeks. Now, of course, Trump is also known for the fact that he tends to announce tariffs, then he rolls them back, and he comes to a deal with the countries in order for the deal to be in his favor. So we'll look over that in just a few minutes. And because of this, because of Powell's statement, I will be focusing more on the microeconomic side and household data, as I believe it could provide some clarity into the Fed's future monetary policies and how they aim to prevent an economic downturn. But for now, I want us to focus on how these news have impacted the markets and market sentiment. So now moving on the gold's chart, we see that gold is continuously reaching new all-time highs while Bitcoin is struggling. Now, I believe this is due to the fact that over the last couple of weeks, we've seen some real changes. First of all, in the administration, when Bitcoin topped out on 20th of January, that's when Trump's administration officially entered in power. And that's when the changes actually began. We also saw continuous tariff announcements. Trump comes out and rolls them back, and the markets have a swift rally before he announces once again tariffs, and then the markets dump once again. So this is what I believe it could be happening right now. I think the markets are in a period of uncertainty, and this is given to the fact that Trump is constantly going back and forth with these tariffs, and market participants don't really know where we're headed next. And because of that, they want to hedge themselves by investing into safe assets, such as bonds, such as gold, and real hedges, which is why we've seen the VIX also pumping as well on Monday. But for now, I think that this correlation between gold's price action and Bitcoin will soon come to change, as for the past weeks, we've seen gold rallying while Bitcoin is dumping, which is, of course, pretty normal in this environment of uncertainty. But once the dust settles, and once the fundamentals will take over once again, not the bearish narratives that everyone is currently fearing, but the real fundamentals, such as the liquidity. So over the last couple of days and weeks, we've seen the global liquidity going up and forming new highs, suggesting that risk assets could soon follow as well. So I believe that gold, this uptrend in gold will soon inverse, and we'll see a correction or more of a distribution phase in gold before a serious correction. And in this phase, I believe that Bitcoin will start catching up and will start showing some relative strength as well. So this is how I see the correlation between gold and Bitcoin moving forward. Now I want us to have a look at how these narratives tend to impact the markets. Now I want us to take a specific example on Bitcoin. Over the last couple of days now, these narratives impact the markets both on a high time frame as well as on a low time frame basis. Now we're focusing on the low time frames to see exactly how they've impacted the markets and how the market sentiment has shifted from this hype and excitement that things are back, that Bitcoin is performing well once again, to once again recessionary fears and tariff fears and so forth, right? So on 25th of March, we saw that GameStop announces that they would implement an investment policy to add Bitcoin as a treasury reserve asset. So that would essentially mean that they would invest a couple of $1 billion into Bitcoin. And a lot of people here got really excited that, okay, things are once again back. GameStop is buying Bitcoin. Now is the time to be bullish. if you guys remember what I said here, I was cautious due to the fact that we had some bearish confluences forming, which we'll talk about in a few minutes. Now, since then, Trump came out with his tariff announcements that, he will implement tariffs and what we discussed earlier, which caused once again recessionary fears as it could trigger this economic downturn. Now, as we discussed earlier, I don't think that these tariffs will have a major impact unless something changes in the current economic environment. If we continue as we've had for the last few months, in which we have a strong labor market, in which we have strong household data coming out, as we've seen last Friday, with a personal income and personal spending coming higher than expected, then I don't think that these tariffs will really be a problem. And my argument that I'm trying to make here is the importance of having a concise and clear strategy, not trading based on emotions, not trading based on the latest narrative, because you can clearly see how fast these change. And in my opinion, the role of media is not to be a contrarian to the mainstream sentiment, but it is to tap into the fears of consumers and of their followers in order to generate engagement. That's how they make revenue. In order to do that, they need to tap into the fears of the consumers. So of course, they'll be bullish each time at the range highs and bearish at the range lows. That's how investors are feeling based on the price action. And so this is the importance of tracking real data, not the narratives that come out and change on a daily basis. Over the last couple of months, we've seen a very interesting pattern forming. So over and over again, since the new administration took over on 20th of January, we've seen an interesting pattern developing on the lower timeframes that has preceded each of these corrections. So it essentially is a series of untapped lows, and I know I've covered this thesis many times before, but I really want to make a strong point here because I think this is what truly led the Bitcoin price, and this is what affected it over the last couple of months. This is also what helped me to hedge myself before each of these corrections by identifying this series of marginal higher lows. So essentially how this goes is we have a series of higher lows. Okay, so the price doesn't tap into the last low here. So for example, a healthy market structure on the lower time frames here would look something like this. You have the initial wave 1, then you have an ABC, you trigger the liquidity of this last low, and then you bounce on higher with a much healthier rally. But instead what's happening on the lower time frames, and we've seen this pattern playing out over and over again, is that these lows never get triggered. Okay, so if for example a trader wants to take a long position here, he would set his stop loss over the nearest low, which would be this one. And by doing so, market makers line up piles of stop losses in order to trigger them, and this leads to a liquidation cascade. Now, once again, I explained why these liquidation cascades occur in the first place, and my argument here is that it allows market makers to accumulate in large sums of money. These liquidation cascades essentially are nothing more than a lot of stop losses getting triggered and forced sell orders. So these forced sell orders can act as a counterparty for the market makers that want to buy. And interestingly enough, each time there was a similar pattern like this developing, Trump came out with a tariff announcement. So the first one was back in early February, in which he announced a tariff war with Canada, Mexico, and China. Something similar to that. This was the mainstream narrative. Then the markets dumped. Then they had this recovery in mid-February before they dumped once again, as Trump has announced tariffs. And here, the same pattern developed once again. We had higher lows forming, then they all got triggered in this liquidation cascade. In early March, we had the same pattern playing out, in which we had these marginal series of higher lows that also preceded a tariff announcement, as we see here, which caused this correction. Now, Trump's 25% car tariff ignites international criticism. This triggered a dump on the lower time frames. As we see here, a series of untapped lows preceded this announcement this time as well. And if you remember what I said a few days ago when we were at these levels, I said that caution was the most important factor. A lot of people were really euphoric, really hyped, not euphoric, but more hyped and excited that Bitcoin was outperforming. So this is what helped me to foresee each of these major events that everyone's currently fearing and everyone's talking about right now. The charts and the data points always front run and always lead the narrative, not the other way around. So this is something I really wanted to cover. I don't think that the latest announcement of Trump has led to this correction. I believe we could have foreseen that a correction was in the books, since there was the same pattern developing once again on the lower time frames that preceded each of these corrections. So I made the argument that until the variables change, we cannot have a different outcome. And this is essentially a mathematical equation. You cannot have the same variables that lead to a different outcome. And so far we had the same variables, the same series of untapped lows developing, the same hype and excitement at range highs as we were testing a resistance range. And then Trump came out with his announcement. So it was the same playbook that played out once again here as we have seen over the last couple of months. So now, what will follow next for Bitcoin? If you watched my last update regarding the low timeframes, I mentioned that there is a high likelihood that will bottom sooner than most expect right now. As we've seen the start of this correction, a lot of people have flipped bearish, a lot of people that got really anxious, and so I believe that there's a higher likelihood that we will not have a completed sweep of these lows as we've seen over the last couple of months, but instead I think that Bitcoin has a high likelihood of forming a higher low and changing this structure. As we've seen so far, Bitcoin has only formed lower lows throughout all of these weeks. So this first higher low, okay, now these higher lows, I don't think they count. I think they are part of an internal market structure, and they do not have significant implications on the high time frames, as we've seen Bitcoin sweeping these lows without even caring of this higher low. Now on the low time frames, we seem to be forming these bullish divergences, which is a very good signal. But once again, I still believe that we need to wait for additional confirmations in order to confirm that this was the bottom, and that from here we will bounce on higher. So I believe again that for the first time we will confirm a structural shift on Bitcoin, and in order to confirm that, we would need to see a break above the prior breakdown point. Now, if you remember my updates when we were at these levels, I said that in order to confirm that the low time frames were bullish and what would be our Q sign in order to flip bullish on the lower time frames, we would need to see a break above the prior breakdown point, which was this one. Now it changed to the $88.8 thousand level. So once we will break above this, I think that low time frames will become bullish once again, and this would act as a confirmation. Now again, if we approach these levels and then start off a chop, failing to break above this level, then low time frames become bearish once again, and this is where we need to start being cautious, as we could have a continuation of this dump lower. This is how we need to adapt to new market circumstances in order to be a successful trader. We don't have to remain biased. So whether we're bullish at these levels and then the price goes on higher, we do not have to keep our bias when we reach these levels, due to the fact that there are additional confluences that have built and that can change our outcome. There are different variables that apply at these levels, and so until there is a clear structural confirmation here, which would be a break above these levels and then a retest to bounce on higher, then we need to remain cautious. So this is something I'll keep tracking in the coming days. In my opinion, low time frames are looking bullish right now, and again, we've seen a lot of bullish divergences forming on the lower time frames. Now, as a conclusion, I would like to add the fact that it is very important to keep paying attention to the charts and objective data points, not the narratives that follow them. So moving forward, this is something I'll track. I believe this is something worth tracking, the current market structure and how Bitcoin will respond once it tests these levels. That's something I'll keep you guys updated on. So this has been the video for today. If you've enjoyed it, don't forget to give it a thumbs up and make sure to subscribe to the channel so you never miss out on future updates like this. Thank you all for watching, and I'll see you guys in the next one.